Please start and give us some of your thoughts on what's happened with the China stock market and its impact on global markets.
Well, I think we had this tremendous turmoil on global markets and here and in China for the wrong reasons. I believe that there is no particular reason to assume or fear that China's growth has suddenly dipped far below what we think it is. There's no evidence of that at all. So the sharp market correction that we have seen both in New York and in Shanghai and Shenzhen is likely to be a blip that will not be sustained. I have no reason to assume that or to observe that the China growth has suddenly dipped far below 7%, as many commentators have suggested. And therefore, I think one of the major reasons underlying the market nervousness and turmoil is just null and void.
Could you expand on that a little bit, Peter? I was watching CNBC, and a very prominent investment manager was saying the same thing you just said. He was roundly ridiculed. So can you give us a little more background? I don't think people understand why.
Of course, we had a major correction in Shanghai starting in the middle of June. And I think the government intervention to try and stabilize the market was rather ill-considered and very poorly executed. As we now know, that started around on the New York market, and that combined with the exchange rate decisions, the Tianjin explosions, and the rumors that China's growth was vastly overstated and that there's more trouble ahead for the commodity markets was, I think, more based on rumors than on facts. I don't see any evidence that the Chinese economy is in more trouble than we knew. Of course, we knew that it had been slowing down for some time. It had to slow down to accommodate the need for a significant rebalancing or restructuring. We all know that there are major economic adjustments ongoing in China and that the direction of political initiatives seem to be different from the direction of economic initiatives. And that is a source of major problems, and we should be worried about that. But I don't see the Chinese economy going to hell in a basket right now. As we know from the big correction on Wall Street today, the Dow went up by 600 points, as you may have seen. I don't know what will be happening in China, but the large correction that we have seen since the middle of June is not so surprising. There was too much liquidity pumped into the system, and that liquidity, I think, led to the bubble of stock market prices in China. I think the bubble in the US was far less serious and much more stable than in China. I don't think that the turmoil that we have seen in the global financial markets are indicative of China now being on the verge of collapsing.
Like Peter, I was a bit surprised at the extent of the U.S. reaction and the way that this sort of headline grabbing, rumor mongering led to this heightened sense of panic outside the U.S. And I wonder if now that China is recognized, as you said earlier, as such a major factor in the world, we now have an audience, if you will, an investment community that is so ignorant of how China works and what's going on there, that this sort of volatility may be a function of the future simply because of that gap in understanding. And the little butterfly flaps out of China can have these sorts of reactions. And I just wonder if this is an ongoing feature of the investment environment in the next 12 to 60 months or so, and until that ignorance gap closes.
I think that's a very, very perceptive comment, and I subscribe to that. I think we are in for a period of volatility, in part because markets tend to overreact, don't understand what's going on. The decisions have to be made from minute to minute. And in this particular case, the enormous decline of the Dow Jones is very hard to explain on rational grounds, because the Chinese economy is slowing down. We knew that, but there is no dramatic slowdown. There's no evidence of any serious problems other than the political problems. I see political problems in China plenty, but the economy is actually rebalancing. The labor markets remain on average very strong. Real wages continue to grow. The service sector is now much more important for total GDP growth than the manufacturing sector, yet everybody continues to look at the manufacturing PMI. We should wait until we get the service sector PMI, and that we haven't seen yet for August. So I agree with Mr. Bader that we have a problem of perception and interpretation here.
I mean, we can look backwards and we can have a debate about whether GDP was really running at 7 or really running at 5, as some say, and look at other metrics that are much weaker. And that's all fine and good, and we can disagree on that or agree on that, whatever. But we have just witnessed a spectacular overt failure of government control of a pretty critical financial market in China. We have an investment bubble, at least in terms of, investment share of GDP, to the extent we've never, ever seen anywhere before. Much of it, I would contend, predicated on a belief that, well, we can do silly things because the government will always be there. So that just blew up in spectacular fashion in the A-share market. So looking forward, if that has no effect on investment behavior, on the extension of credit, on purchase of speculative purchases of property, then we can go back to the debate about whether we're at 7 or 6. But I think that the bigger issue is whether we're looking at a pretty sharp change in the flow of credit, speculation in real estate, and overall investment levels in China, which, after a spectacular stock market crash, I would suggest are at some risk of slowing dramatically going forward.
We have indeed seen, as Brian was saying, an example of how the Communist Party can mismanage a crisis. There was a sharp correction in the A-share market in Shanghai and Shenzhen. The government, I think, totally mismanaged the response to that. It was perhaps understandable from their point of view that they tried to prevent a rout and tried to stabilize the market, but they did it in a stupid way and lost a lot of credibility both domestically and internationally. And that could still lead to further problems into the future. The way I see it is that this incompetent approach by the Communist Party to the sharp market correction on the A-share market in China, that could lead to a further decline in confidence in the party and the government in China's middle class, and that capital flight will pick up. And who knows what all the unintended consequences of that will be. There has been an acceleration of capital flight in recent days and weeks, but their reserves are so high that it will take a lot more capital flight before that becomes a serious problem. But all sorts of unpredictable consequences could set in. The confidence in the Communist Party's ability to manage a crisis, I think, has been severely shaken. That has also affected the attitude and perceptions of the foreign business community, which remains extremely important in China's economy. If more foreign national corporations are closing shop in China or beginning to make statements that they will no longer invest in China, I think that could set in motion a negative spiral that we cannot foresee at the present time. But I agree with Brian that we are in a highly uncertain situation.
Felix Sachs, and I would concur in that. In the past, people would say only X%, 10% or whatever of the Chinese population is invested in the market. But we look at who that 10% is, And these are your retail investors who are part of that rising middle class. I think their wealth has been diminished. And indeed, these are the same individuals who have been investing in the shadow banking trust products as well. And I think there is stress also on the recapture, repayment to those individuals of that. So to the extent that one is looking to the expanding middle class to continue to spend more as opposed to save more, I think their faith has been shaken. And I think the comment has been made also as to what does this say about structural reform going forward. And I think this crisis in management strengthens the hands in some respects of the foes of structural reform, as opposed to helping the mandate to, for example, reform the SOEs and make other areas of the Chinese economy more open to competition, i.e. foreign investment, whether it be in agriculture, whether it be in TMT or other vital sections of the economy. There was that Rhodium report that we've talked about in the past that forecast 6% growth in China, but that was only if the reforms took hold. And without those reforms taking hold, the prognosis was closer to a 3% annual increase. So I think these could be very problematic times relative to the Chinese economy.
I agree with all of that. This is an extremely uncertain time and anything can happen, but it hasn't happened yet. I think the market has overreacted, and especially in the United States, and initially until about 3 or 4 days ago also in Europe. Europe is now doing better. Australia and New Zealand seem to come out of the slump. But we are dealing here, which I believe has been correctly pointed to as a major shaken of confidence of the Chinese middle class in the ability of the communist leaders to manage the situation. And that creates a very unpredictable situation. But there has been no collapse in the economy at this point.